Hello and welcome to the stock market analysis. Let's continue to take a look at the S&P 500. So this is the S&P 500 on the futures. Yesterday we had another down day. The market is still below the 50 MA and 20 MA is curving down, something which is not good. But let's take a look at the futures. See what it's telling us. Futures, well, we had a kind of sell off today, but I think it quickly recovered to form almost a bottoming tail. So this is a support area that I showed you, and support will take some time to be eroded, but eventually if support does not hold, it might fall even more. And here might be a little pocket of support, and support, and here also is another area of support. So today, if it does not go back up, we might gap up lower in the SPY, DIA, and so on. So SPY is also still below the 50 MA, something not good. 20 MA declining, and the 60-minute chart you can see it's still below the 20 MA and 50 MA, and that's something not very good, and you should be careful and not take long positions. You should be bearish until it goes back above the 50 MA. With regards to the Qs, it had a nasty day as well. Daily chart went down and is challenging the support area, and if support does not hold, it might fall to here or even here. Still in the declining mode. You can see is below the 200 MA in the 60-minute chart. Is declining, 50 MA declining, 20 MA declining, and you should not long tech stocks, but continue to be bearish until it goes back above the 20 MA or 50 MA. The diamonds are a bit stronger in the 60-minute chart. Well, if it can break above this downtrend line, we may see it going above this downtrend line, go above the 20 MA and 50 MA, and let's see if we can start a new 60-minute uptrend from there. Daily chart, the reason why the bearish momentum is slowing down is because of this support area. There might be a bearish cross here, but if support holds, this bearish cross may be neglected. So let's continue to look at the 60-minute chart to see whether a new uptrend can form. If not, if support erodes, it might meet the 200 MA in the future. So right now, it's not a very good time to buy stocks at the moment, especially when SPY and QQQ are still bearish in the 60-minute chart. So do continue to be cautious. Now, SMH has dropped below the 50 MA and it's going down a bit, and you can see that there's some support around here, and that's why it's halting. If this support does not hold, we might see it drop to about this area. Now it's also not a very good time to buy semi stocks. If you look at the 60-minute chart, once it dropped below this area, we had a bearish cross break below uptrend line and the waterfall cascading down. 200 MA in the 60-minute chart declining, 50 MA declining, 20 MA declining. This is bearish, and you should not take long positions until it goes back above the 20 MA and stabilize and start a new uptrend in the 60-minute chart. Now the techs are getting decimated here. We have a support area here. Again, if support does not hold, we might see it fall to the top of this area, and if this area does not hold, we might see it drop to the 200 MA in the daily chart. 60-minute chart also still in a very bearish mode. Do not long the stock, do not long the ETF or tech stocks unless it goes back above the 50 MA and 20 MA. So stocks like AMD has already showed a lot of weaknesses in the decline, not the time for you to buy. And if we look at basic materials, it's trying to find support at the 50 MA there is quite a lot of weekly support here, which is why it's stopping it from dropping. So in the 60-minute chart, if we can go back above the 50 MA, form consolidation here, we might see it going back up. XLF still a bit weak, but there is support in the weekly charts here, so we might stabilize, and let's see if in the 60-minute chart it can go back above the 50 MA and perhaps start a new uptrend as well. But utilities are doing well, of course, in a falling market. We see it finding support at the 50 MA and 200 MA, and it's gone back above the 20 MA and 50 MA. Maybe it will continue to rise. Right? If the market continues to perform back, it might rise a bit, but generally it's the support area here in the 50 and 200 MA that's helping it to stay. XLI, which are the industrials, weekly chart show that it has made all-time highs going up, but now at a correction, and it's trying to find support in this area at the 50 MA, but this is also not a good time to buy industrial yet, unless the double bottom forms in the 60-minute chart and it goes back above the 50 MA, the 60-minute chart. So let's take a look at gold prices at this moment. Gold futures are still edging up, still above the rising 20 MA, and therefore we should be bullish buyers in gold at this moment. Crude oil futures fell from a doji here and tried to rise but unable to do so, and it's just trying to go up, but so many resistance here, and if it can find support here, then maybe it will go up from there. How about Bitcoin? Bitcoin is at this important area of support right now. Now, if the support does not hold, we might see it breaking down to here and maybe the 200. So this is a very important support area to watch. If it holds, then maybe you can trade back up and you can form a consolidation, and maybe in the future it might break out higher. So I hope this analysis is helpful to you, and I'll see you in the next one.